Hello, trading is closed on the 12th of July, 2023. As always, we'll start with our disclaimer, go over our calls, and then make some predictions. It's my trading plan for tomorrow, which is July 13th, 2023. Please remember, my calls can be wrong. Trade at your own risk. Look for the pattern today with the early low, but so we could gap up. We got that. Tomorrow should have the early high. I said that yesterday's close was in a resistance area, and for the rally to continue, we have to clear resistance. We gapped over resistance, and that's what we had to do. I said I couldn't really predict a response to the CPI report, and that goes true for tomorrow too, because the PPI report comes out and economic reports come out. I just, keep things close to the vest. Well, here's what we said. We have a strong rally into resistance. Need to clear to continue the rally. We did that. We got the pattern with the early low. And we still say there should be a retrace at some point if my count's correct. During the day, MEJT said ultimately higher price it would print, which they did. Here it said ultimately higher price it would print, but they wouldn't stick because there was a lower target as well. We got the higher prices, got the lower prices. That's played out. Here's the daily chart. This could be a bar, which is a reversal bar involving the upper Bollinger Band. Markets don't stay over this band very long. Tomorrow's open can substitute for today's close, and if we open down here, it would substitute for this close not being closer to the low. It would be a reversal involving the upper band, which is a negative pattern. Hasn't happened yet. Well, we had these trend lines meeting here for a possible top. We broke over one of these trend lines today, but not this one. In fact, we had a strong rally right up to it. That's this trend line here. And you know my rules. We rally with a strong move up to a trend line, but not through it. Either you gap over the trend line or the line wins. That means if we don't gap over this high, over this line actually, and they move past it, should retrace. We're still sticking with this count. We think we're in wave red 2. At some point we want gold B of red 2, of black 3 to end. One more move down, which probably won't be a disaster since breadth indicators are so good and went higher today. And after that one more move down, that's the right count, we start a huge rally. So let's use a smaller time frame to see what's going on. All right, well, let's start. We had this as possibly wave A with an A, B, C for B. If you set A equal to 61.8%, then B, it's right here at the 100%. So we had a possible top of B right here. Now you could say, well, you're just stopping too soon, but this could be an expanded flat for wave C because you have good fibs for an ABC there and good fibs for an ABC here. Now, if it is wave C, you can calculate a target. You can take the height hard to get this exact here. Can take the height of gold A, and if gold C equals gold A, well, this says 44.14. When I did it before, I got 44.16, close enough. Call it somewhere in the 44.16 area. So if that's the right count, C could end at 44.16, give or take a few points. And what's interesting about that is if you take wave red A and set it at 38.2 and measure from the beginning of wave C, red C, you come up with the same price, about 44.16. So if we do start down, or if this holds, the waves balance out around 44.16, give or take a little bit. Gapped up, hit a higher high, closed under all these highs. It's a negative pattern if it's maintained at tomorrow's open. If you gap and promptly overtake this high, all that negativity goes away. But let's not forget, if we don't gap over that trend line we showed, we don't think any move up is going to stick. Now, I don't know what happens when the PPI report comes out, and if we gap way up here, the whole idea is killed. But if that doesn't happen, and if this holds, we have a reasonable target on the downside for wave gold C, which I think is the end of the decline. Tomorrow's pattern has the early high, doesn't mean you won't gap down. Typically it's a negative day and the low comes in the final hour, but if it's strong, more strength tends to follow in days to come. Now the PPI report comes out before tomorrow's open. I just can't predict the response to such reports with any high level of accuracy, and you should keep that in mind. The equity-only put-to-call ratio hit an extremely low level of 0.39 today. This one's kind of off the charts. It shows an extreme level of bullishness by option players. They're almost always wrong, and levels like this come near tops. Now, sentiment indicators aren't precise for timing. Doesn't mean you're not going higher tomorrow. But in terms of time, we're probably pretty close to a top here, if we haven't already seen it. Doesn't mean you're close in terms of price necessarily. However, unless we gap over the high of day, any rally should retrace because of the strong rally to, but not through a significant trend line. If we start lower instead, there's balance of the waves around 44.16 cash. Doesn't mean that's the only level that works. It's a level that works. Starting lower is entirely plausible since we gapped up, hit a higher high, and closed under intraday highs. Absent a gap and prompt overtaking of today's high, we should see lower levels sometime tomorrow, regardless of how we close. So sentiment is telling us we're close to a top if we haven't already seen it. Breadth is telling us, and the wave count's telling us, any drop here won't be too bad. And if we go up, we can go higher, but I don't think it'll last long. If we drop, we have one possible target around 44.16 cash for the end of a drop, which isn't too bad. And I think once we get that, and once that wave gold C of mine's over, I think we then start wave 3 of multiple degree higher, as long as that wave count I use is a valid count. It's a pattern with the early high, and that's today's call.